There's a problem with pastor taxes, and no one is talking about it. Tell me I'm wrong. Because of your ministerial complexity, professional tax preparation costs you $500 or more. And many CPAs still get minister taxes wrong anyway. Believe me, I've seen it. So you file yourself to save money. But here's the thing. In all my years of reviewing pastor returns, I've never seen a self-prepared ministerial return without significant errors. Not one. That's a huge problem. So what's the solution? Where's the middle ground for pastors who can't afford premium service but don't want to wing it alone? Well, I've got some exciting news about that later in this video. But first, I want to go over the 5 most common mistakes I see when I review pastor tax returns. These are mistakes that could be costing you thousands every year, and I see them in both professionally prepared and self-filed returns. If you couldn't tell, this is a topic I'm passionate about. I've spent over 20 years in ministry as a worship leader and a church board member. I've seen the sacrifices taken by those who answer God's call to ministry, and I now have the privilege to help pastors navigate their uniquely complex financial situations. I've seen too many faithful servants of God unknowingly overpay the IRS by thousands of dollars, money that should be supporting their families and funding kingdom work. On the other hand, I've seen severely underpaid pastor families get hit with thousands in back taxes due to filing errors, completely devastating their financial situation for years to come. So, without further ado, let's jump into the 5 most common mistakes I see when I review pastor tax returns, and more importantly, how to fix them. Mistake number 1 actually starts before you even touch your tax return. It starts with your church's payroll department. You may be completely proficient filing your own taxes as a minister, but if your church is making payroll errors, no amount of maneuvering in TurboTax is going to right that ship. These errors need to be handled at the source. Here are the most common church payroll errors that wreck pastor tax returns. First, housing allowance appearing in box 1 of your W-2. When churches include housing allowance in your wages, it causes massive overtaxation. The IRS will tax you on money you're legally entitled to exclude, and trying to fix the problem yourself by deducting your housing allowance elsewhere sets up a huge audit red flag. More on this later. The second mistake, and the one I see the most, is your church withholding Social Security and Medicare taxes. Your church should never withhold these taxes for you. If anything shows up in W-2 boxes 3 through 6, your church is doing your payroll wrong. And the third mistake, missing box 14 reporting. Your housing allowance should appear in box 14 of your W-2 for documentation purposes. Here's what your W-2 should look like. Box 1 should show only your wages excluding the housing allowance. Boxes 3 through 6 should be completely blank, and box 14 should show your housing allowance amount. If your church is making these errors, approach the conversation with grace and partnership. They want to do it right. They just need guidance on the unique requirements for pastoral compensation. And, by the way, I provide church board training to help address this and other issues churches commonly face. Link in the description. Now, mistake number 2 is treating the housing allowance as a deduction. Here's the fundamental misunderstanding. The housing allowance isn't a deduction you take on your tax return. It's an exclusion that should never appear on your return in the first place. If your housing allowance shows up anywhere on your Form 1040 or related schedules, you've done it wrong. It's what I call a ghost number. It should be completely invisible in your tax calculations. Many pastors and their preparers mistakenly enter the housing allowance as income and then try to deduct it elsewhere. This approach fails because the housing allowance isn't a deduction, and trying to treat it as such is a big no-no. Also, since we're talking about the housing allowance, remember that your exclusion has to go through a 3-part test. This is the part that TurboTax doesn't help you with. You can only exclude the lesser of 3 amounts: what your church officially designated as housing allowance, what you actually spent on qualifying housing expenses, and the fair rental value of your home, furnished, including utilities. If your official housing allowance designation is greater than either of these two numbers, the excess becomes taxable income. And here's the critical part. You need documentation for all three of these values in the three-part test: a written church resolution designating the housing allowance, adequate expense tracking throughout the year, and a reasonable and clear method for determining fair rental value. Without proper documentation, the IRS can challenge your housing allowance exclusion up to 3 years after filing, potentially resulting in a huge, unexpected, and unnecessary tax bill. You don't just want to get your return filed correctly, you want your return to be audit proof. Speaking of getting your taxes right, I'm excited to announce something I've been working on. I keep meeting pastors caught in that impossible middle ground I mentioned earlier. You can't afford premium tax preparation, but you don't feel confident filing alone. So, I'm launching new tax services through Shepherd's Wallet, specifically designed for pastors who need expert guidance without premium prices. For less than $100, you'll get a comprehensive review of your most recent tax return, complete with a full report identifying any errors, actionable next steps, plus optimization opportunities that you can use to take advantage of the special rules that only apply to you. We're also offering hands-on tax filing training, so you can continue saving money with self-service options with confidence and clarity. Stick around to the end of the video for more information. But whether I get the pleasure of working with you or not, let's continue with the remaining three mistakes so you can catch them before they cost you big time. Mistake number 3 is miscalculating self-employment tax, or what we call SECA tax for ministers. Here's what many pastors and their preparers miss. SECA tax should be approximately 14.1% of your total ministerial compensation, and I mean all of it: your W-2 wages, your housing allowance, wedding and funeral fees, and any other ministerial income. I regularly see returns where the housing or parsonage allowance is completely omitted from SECA calculations, or where generic tax software automatically treats W-2 wages as FICA eligible when they're not for ministers. Let me give you a real example. Pastor Johnson earns $50,000 in church wages plus $15,000 housing allowance. His correct SECA tax should be about $9,184, but his tax preparer only calculated SECA on the $50,000 wages, underpaying by over $2,000. When the IRS catches this, and they will, he'll owe that difference plus interest and penalties of about 7% annually. Here's another piece most pastors miss. If you live in a church-owned parsonage, you still own SECA taxes on the fair rental value of your housing benefit. While parsonages are excluded from income tax, you must pay roughly 14.1% SECA tax on the fair rental value out of your own pocket. Since your SECA tax burden is so high, and your church is prohibited from withholding it for you, most ministers need to make quarterly estimated tax payments directly. Failing to do this triggers underpayment penalties, again at about 7% annually. Mistake number 4 is actually a series of errors that specifically affect pastors who have filed Form 4361 and opted out of Social Security. First, tax preparers often incorrectly calculate SECA taxes on ministerial income for opted out pastors. If you've properly filed Form 4361 and received approval, you owe no SECA taxes on ministerial income. Not on W-2 wages, not your housing allowance, not wedding fees, not funerals, nothing ministry related. If your Schedule SE shows any self-employment tax on ministerial income, something's wrong, and you could be overpaying the IRS big time. But I've seen this same error in reverse as well. While some preparers incorrectly apply SECA to ministerial income, others make the opposite mistake, assuming all income is exempt. Form 4361 only exempts ministerial income. Secular counseling, business income, or other non-ministerial 1099 income is still subject to normal self-employment taxes. Also, remember this. Opted-out pastors still have to follow all housing allowance rules for income tax purposes, including documentation, record keeping, and calculating the three-part test. The opt-out only affects SECA taxes. Income tax rules remain exactly the same. Now, I'm planning an episode coming up that highlights your unique situation as an opted-out pastor, so be sure to hit the notification bell so you don't miss when that drops. But to tease that video a little bit, here's the stark reality. The vast majority of pastors are nowhere near replacing the Social Security benefits they've given up. Your SECA tax savings is not free money. It's the result of losing an entire social safety net which you need to replace yourself. A pastor who would have earned $2,000 a month in Social Security not only has to cover that income shortfall, but also their Medicare premiums. Safely and reliably replacing those benefits alone requires about $750,000 in extra retirement savings. Without aggressive replacement savings and insurance planning, opted out pastors often face retirement poverty. I know you know a pastor who's in this situation. It breaks the Lord's heart. Please take action now to avoid this fate for your own family, and be sure to follow this channel for tips on how to do just that. While you're at it, please consider liking this episode. It might mean one more opted out pastor sees what we're doing here and is able to take charge of his or her retirement future. Mistake number 5 is missing significant optimization opportunities that could save you thousands annually. The biggest one most pastors sleep on, and this is a huge benefit that only pastors get, it's the 403b SECA reduction rule. According to IRS Publication 517, ministers can exclude elective deferrals to church 403b plans from SECA tax calculation. This is an amazing benefit, potentially saving thousands annually. If your church has a 401k instead of a 403b, they're disqualifying you from this benefit for no good reason, and I want to have a talk with them. Another strategy that works well for pastors who haven't opted out is taking some compensation from your church as 1099 income for non-ministerial duties. This allows you to deduct business expenses that would otherwise be non-deductible, providing yet another opportunity to save on those brutal SECA taxes. And finally, here's a retirement planning strategy most pastors never consider. Keeping funds in your church retirement plan to maintain housing allowance eligibility in retirement. Roll those funds to an IRA, which is the first thing a financial planner will suggest, and you lose this benefit forever, costing yourself tens of thousands in lifetime tax benefits without you even realizing what you've lost. The true cost of these mistakes isn't just academic. I regularly see pastors either overpaying or underpaying by $2,000 to $5,000 annually due to preventable errors. Hopefully, this episode has helped you avoid some of the big ones. Here's the bottom line. You didn't enter ministry to become a tax expert, but you can't afford to ignore these issues either. The good news? You don't have to navigate this complexity alone with Shepherd's Wallet new tax services. You can utilize our services in 2 ways. First, I'm offering a comprehensive tax review. For $95, I'll analyze your recent return, whether you prepared it yourself or paid a professional. Think of it as a second opinion. I'll go through your return with a fine-tooth comb, checking for errors and providing a full written report with optimization opportunities tailored to your specific tax situation, allowing you to take that information and use it to file with confidence. And for pastors who would like more hands-on training, I'm offering a self-file training program. For $225, you'll get the same analysis as the tax review, plus I'll personally walk you through your specific tax situation, train you step by step on how to file your own tax return, and send you home with a video of our session so you can handle future years independently. If what I've shared today resonates with you, I'd love to help. Sign up for your comprehensive tax review at shepherdswallet.com/taxes right now. I'm also excited to share that my upcoming book, Shepherding Your Finances, breaks down minister taxation in detail, demystifying the entire situation for you once and for all. You can pre-order it with a special 35% discount at shepherdswallet.com/book. Remember, God doesn't want you to overpay your taxes any more than He wants you to underpay them. Wise stewardship means paying exactly what you owe, nothing more, nothing less. And as a pastor, Doing that requires education and empowerment, hopefully somewhere between blindly trusting the professionals and winging it on your own without guidance. You've dedicated your life to shepherding God's people. Let's make sure your finances are properly shepherded too. If this video helped you, please subscribe and hit that notification bell. I create weekly content specifically for pastors on financial topics just like this. And I'd love to hear from you in the comments. Which of these mistakes made you want to pull out your last return and do some error checking? Thanks for watching, and I'll see you next week.